Hi, everyone. We're very happy to be back today for the first time presenting after a few months break. Some of you may know that in February 2019, we started winding down Melon Port after handing over the protocol to the mainnet and giving governance to the Melon Council. We're going to touch on the Melon Council later in this talk. But for the first part of this talk, we're going to talk a little bit about what we're up to now, i.e. the former Melon Port team. And we're gonna do something a little bit different and risky. Just to give you some context. 1 second, this is really embarrassing. Hello?
Hi, Mona. I heard you're launching a new fund. I want to invest $10 million. Where do I sign up?
Oh, Zare, hi. Yes, it's true. I am launching a fund. I'm surprised you heard already. The thing is that it's a little bit frustrating. It's taking a lot longer than I expected. In fact, I'm being told it's going to take between 6 to 12 months. So your $10 million, it's very, very welcome, but we're going to have to wait a little bit. I have to explore a bunch of fund administrators, figure out which price offerings are best. These fund administrators are there in order to check and reconcile my trades, make sure that there are no counterparty breaks, checking the share price of my fund on a daily basis. I also need something called a custodian. It's a legal requirement. It's really frustrating. So just bear with me, Zara. I need 6 to 12 months, and hold on to that $10 million, please.
Wow, that's a lot. Well, I really need that money to be working, so just let me know when you have everything done with the legals so I can ask my people to contact your people.
Oh, the legals. Oh, Zara, please don't get me started on the legals. This is another headache. I mean, we're looking at 100-page documents. The fees are adding up to $40,000, $50,000. You don't understand. These lawyers, they want to know everything. They want to know how many positions we can take, maximum position size. They want to make sure that we've got everything written down to the point. It's so frustrating and it's so expensive.
Sorry, Jenna. Sorry, Mona. I have to interrupt. I gotta go. I have my jet who's leaving. So just whatever, call me and I'll send them up. Bye.
Oh, okay. Bye. Hello?
Hello, is this Mona?
Speaking.
Hi, this is Jenna, your fund administrator. We're calling because we have some trades that are not matching up. We are getting reports from numerous counterparties who are reporting trades with you, but we didn't get your reporting equivalent. So how do you want to proceed?
Jenna, you said your name was? Listen, this really isn't a great time. I'm in the middle of some trades, and I'm not really sure what this has to do with me. Whose job is it to report these trades, and what do you need from me exactly?
I'm sorry, but I think this is your job. We thought we sent you a reporting sheet on Excel a couple of days ago. Have you received that?
I mean, you might have, but I'm checking now. What? You want me to fill this out for every single trade I did in the last 3 days? There's like 40 columns in here.
Yeah, I mean, this one is actually just for equities. I think in your email you should have another one for bonds, FX trades, and also derivatives. Do you think you could send us all of the past few days' reports by the end of the day?
So what we just acted out here is a true story. Before setting Melon Port up and before launching on the Melon protocol, I tried to start up a long-short equity fund, and this was basically my everyday experience, and it was a nightmare. And this kind of experience formed the basis for setting up the Melon protocol. So Jenna and I are back in here today with some of the other former Melon Port team to tell you that life doesn't have to be that hard. In fact, we're here to welcome you to the world of on-chain asset management and leveraging blockchain technology to make life a lot easier for asset management. So with that in mind, we're going to give you a quick recap of what Mellon is and what Mellon can do. So for those of you who don't know, and for those of you who need a reminder, Mellon is a decentralized protocol for on-chain asset management. And what that really means is you can predefine a rule set by which you want your fund to run. So you can predefine the parameters, risk management rules, etc. in smart contract code and deploy your own customized fund to the blockchain. So it's basically an infrastructure for asset management 3.0, or another way to look at it is it's a tool to deploy and manage on-chain investment vehicles, and also for investors to invest in those vehicles without having to trust the manager, because they know that the rules of the fund are embedded in code. So I mentioned at the beginning of this presentation, we're going to do something a little bit different. We're here to DeFi more and talk less. And what we're looking to do now is ask the audience, are there any crypto managers here or people who like to trade crypto? Okay, great. I see 5 or 6 hands go up. Do any of you think of you as avant-gardists? Do you think of yourselves as avant-gardist, futuristic fund managers who might one day use a protocol like Mellon? Great. Okay, so I need one of you to volunteer to come up. Or 2 of you, if you feel better to do this in a pair. Great. Fantastic. Great. Can we give these guys a little round of applause? So what we're going to do...
Hi.
Hi.
I'm James.
We're going to introduce these guys to the audience. This is James, and this is Christopher.
Nice to meet you. Hi, Chris. Nice to meet you, James.
I'm very excited. You have to come here if you want to be on camera, by the way.
Each of you.
Please take a seat. So what we've done here...
Can I wear your coat?
You can. Actually, if you manage to complete the process successfully, I might even give you a quote.
All right.
So what we're going to do here...
Okay, so we're going to see.
We're just plugging one of the 2 laptops onto the screen. As we're going to set these 2 guys a challenge. We're going to ask them to set up a Melon fund during the course of this presentation. And what we're going to do is we're going to zoom in and out of what they're doing and go to different parts of the presentation. But we're hoping that if there is no Wi-Fi interruptions... By the way, you have to keep these phones next to the laptop because we're on hotspots at the moment.
Okay.
Yeah.
So what we're hoping is if we have no Wi-Fi connections and no disasters, that by the end of this presentation, they're going to have 2 Melon funds set up, which is very risky, I'm aware, but we're going to try it anyway, because that's what an avant-gardist would do. So we're gonna let you guys just get on with it without telling you too much. I'm going to try to describe to the audience what's happening as you're setting up a fund. But just to let you guys know, in order to save some time, we've pre-funded Ethereum wallets for these 2 chaps. So they basically will just get started from the setup fund page side of things. So whenever you're ready, go ahead, no pressure. I will just kind of comment along what you guys are doing. So this is the first step for setting up a Melon fund. And the first thing you do is give your fund a name.
Oh.
And this is a unique name. This is a unique name. Each user, once the name is used, it can't be reused again. And what you need to do next is pre-select the exchanges you want your fund to be able to interact with. The cool thing about the Melon protocol is whatever exchanges you select, at a protocol level, we aggregate the exchanges. So basically, you will always see the best bid and best offer of the decentralized exchanges you have selected. So here, we've only selected Kyber Network. And the next step is selecting which assets you want your investors to be able to invest in. I saw that it was James selected quite a few assets. And he's racing ahead. Wow, I can't even keep up. He's now selecting the management and performance fee. This is the fee structure that he wants for his fund. So for those of you who don't know, management fee is completely independent of performance of the fund. This is really set up to cover the operational side of things. And the performance fee is meant to align the interest of the fund manager with the investor so that if he makes a profit for the investor, he can take another fee from that. And he's selecting a 365-day period to claim his fees, which is really good, and quite standard as well, although you can actually customize all of these steps to your own preferences.
What about watermarks?
Yes, there is. It does. So the protocol, there is a formula in there which bases. So it will always, at the end of each time period, it will always start the performance. Oh, sorry. Yes. So the question was, what about watermarks? So there's a really good blog on how the fees are calculated. I won't go into too much detail, but basically at every time period, it resets from the new watermark. So the fees will only get charged from the watermark level, the high watermark level. So here at this step, you get a summary of all the customized features that James has selected. So you can see a summary. He can check everything as he wanted it. And if he's happy with that, he can go ahead and create fund. And this will basically deploy all of his features to the blockchain. Now you can see that there's 9 steps he has to sign on the blockchain. And this is going to be a little bit time consuming. So what we're going to do is while he signs these 9 transactions, we'll just watch the first one, and then I'm going to take you to see a different part of the protocol's kind of stack. So he's clicking setup step 1.
Your hotspot is off.
Oh no, sorry, hotspot error. Did you find another solution?
I just put it on my phone.
Oh,
but
great.
It might be
Okay.
slower
Or?
as
Okay.
it goes.
Okay. So James has a slight advantage here. Okay, so it's creating the accounting part of the fund. And step 1 was successful. Now I'm going to let James go on to do the other 8 steps. And I'm going to take you guys on to another part of our protocol stack called the Mellon monitoring tool. So we're very proud to announce yesterday the new release of the Mellon monitoring tool. And this is basically, you can think about it as an ether scan for Mellon funds, which is highly functional and can scrape data, historical data on any fund, on any Mellon fund that is on the mainnet. So on the first page, you can see here an overview of the number of funds on the mainnet since we went live, the total assets under management, the number of investors on the mainnet, and also across all funds, and also the AMGU, which is like the asset management gas in our network. You can also click onto the tab which talks about Mellon funds. And you can see here a long list of all the funds that have been deployed to the Mellon mainnet. So hopefully if these 2 gentlemen are successful, we'll see this number go up to 115 by the end of this presentation. And the tool is very interesting because you can sort funds according to any of these characteristics. So for example, assets under management, oops. So I'm not used to Jenna's computer French keyboard. So, you can sort by assets under management. For example, you can sort by the share price of the fund. So here you can see, for example, the best performing fund since inception is called MBS. And it's up 55% to date. You can see the number of shares that have been created in the fund, and you can sort by that. And you can look at, granular detail like what protocol version the fund is on, etc. You can also click into any fund, and you get a fund fact sheet. And all of this data is taken on, from the blockchain, of course, but presented in a very user-friendly way. You can see information about the fund address, the manager address, the rule sets that were embedded in this particular fund. You can see the gross asset value and net asset value, the number of shares, the share price. This particular manager hasn't selected a management fee or performance fee, so he or she is essentially working for free, which we like. And you can see things like annualized return and annual volatility. Now, I'm actually just going to zoom out of this and go to a fund that's been more active, because just to prove to you that those statistics do work. Now, I don't know why you would call your fund. Sorry, 1 second. Is this still online?
I don't know. I would just remove it.
Yeah. It's actually.
This is not.
Sorry, we just reloaded that. So, okay. So I'm just going to go to a different fund in here. Land and Cattle. I'm not sure why this person chose this name, but I happen to know that this fund has had quite a lot of trades. So I just want to show you that you can you can see things like the annual volatility on the fund and the annualized return, et cetera, et cetera. So these numbers and formulas do actually work. Another interesting feature about the Melon monitoring tool is you can get information about the managers. You can see which addresses are linked to which funds. So you can see if a particular address has more than a particular manager has more than one fund, for example. So you would click into this address and you would see that information. You can also get information on investors in funds. So for example, if I wanted to sort investors by the number of investments they've made, I can see that this particular address has invested in 7 different Melon funds, a total of 1.45 ETH. And I can click into that, and I can see which funds he or she has actually invested in. Now, you'll notice that all of these 7 funds have very similar names. That's actually because this particular setup was part of an on-chain asset management course that was taught at the University of Liechtenstein earlier this year, which was led by Hans-Jörg Hettisch, actually, and another member of our former team. And basically what happened was on this course, several students grouped up to form seven different teams, and they basically set up Melon funds and competed on the mainnet for a few weeks and learned about decentralized finance, interacting with decentralized exchanges, and risk managing using the Melon protocol. So you can look into each of these funds' performance, see how much was invested, but this was just kind of demo and used for teaching purposes. You can also look at the asset universe. So as of today, there are 11 tokens that can be traded in the Melon asset universe. We plan to increase that over time. But these all receive on-chain price feeds. And you can basically use this as an interesting way to gauge sentiment on different tokens. So for example, if you wanted to sort the tokens by total assets invested across all funds, you could see that Givethe and Mellon and Maker are in the top 3. And this would maybe be an indicator of consensual trades or the opposite. So it's an interesting stat to have. And the last part of this monitoring tool that I wanted to highlight to you guys was the exchanges. So for those of you who are familiar with reporting, compliance and reporting, and how much of a headache that is for crypto funds or funds in general, then you'll be happy to know that this tool can pull up all the trade data on any of your funds across any time period and basically form a nice report. And if somebody wanted to investigate some suspicious behavior in a certain fund or for any other reason, they could look into any fund and find the data they needed.
Okay, you take over here.
Yeah.
You're not done.
Okay.
Cool. So those guys are still in the creation, in the fund setup process. We're getting there with like a very fragile Wi-Fi situation. So hopefully it will go through. But we're gonna keep going and just tell us when you have your fund. Oh, sorry. Excuse me. Yeah. So you just tell us when you have one fund ready, and we'll come back to you guys. In the meantime. We wanted to, so obviously we've just explained what Mellon is, what it can do. You kind of had a first insight into how it works. But there are a couple of things that are quite unknown about Mellon and misunderstood. And we think that it has like specifically 2 very unique characteristics that we want to highlight today. So the first one is that Mellon is one of the few protocols in DeFi that does what we call multilateral smart contract integrations. So, in DeFi, protocols very often interact with each other, but very often you have one protocol who will integrate 1 or 2 others. But with Mellon, what is really cool is that everything on DeFi is interesting for asset managers. So the Mellon protocol can integrate with all of the other DeFi protocols, whether they are decentralized exchanges, lending protocols, derivatives, you name it. And those integrations are at a smart contract level, which means that the Mellon contracts interact directly with the Oasis DEX contract or the 0x contract. So it's not just a front-end level type of integration, it's really a smart contract level type of integration. So at the moment, we have in the V1 of Mellon, which was released in February, we have integrated decentralized exchanges. We have integrated 4 of them: Oasis DEX, 0x, Kyber Network, and Edfinex. There is one upcoming integration, which is the integration with Uniswap. So it means that all of the asset managers who operate on Mellon can trade on those decentralized exchanges and can see a kind of like consolidated order book of all of those exchanges. In the next few months, we will continue integrating with more decentralized exchanges in the space, specifically the ones that have the most interesting volume. And also in the next few months, what we're going to start doing is integrating lending protocols to enable asset managers to take leverage or to lend their capital to gain interest. And then a little bit later, maybe next year, we'll start integrating derivatives. We've seen a couple of things out there: prediction markets, synthetics assets, etc. All of that is integratable. So integratable? You get it. So basically, when we will have completed all of those DeFi integrations, Mellon will be what we call a one-stop shop for everything DeFi. So you will be able to access and interact with all of the DeFi protocols just by going on the Mellon interface, because it is connected at the smart contract level. So we think that's pretty cool. That's the first very unique thing about Mellon. And the second thing is risk managing DeFi. So the reason why we're all here today at DeFi Summit is because, as you've seen, the DeFi space has evolved quite a lot in the past few months, and we've seen an increasing amount of projects building in that space, specifically lending protocols. And this is super cool, but it also creates a lot of risk, a lot of financial systemic risk to the Ethereum space as a whole, and that's a little bit less cool. But the good news is that using Mellon, we believe that we can reduce the risk in that ecosystem. How do we do that? So basically, one part of Mellon that we're going to see when we have a fund ready for that is that a fund manager can define its risk profile, its risk management profile. So that is rules that the manager defines at the fund creation, and those rules will always be enforced by the smart contracts. So right now we have rules like max concentration, maximum number of positions, things that are very basic. But when we start integrating lending protocols, we can build new rules that could say, this fund is not allowed to take leverage on a DeFi protocol that has very low liquidity, or this fund is not allowed to take more than X% of the fund in leverage, or this fund is not allowed to to take lending on things that are rated less than AA. All those kind of things are very, very easily pluggable into Mellon, because the whole architecture of our protocol is very modular and flexible. So we built a suite of risk management policies. We call them policies, but anyone can build their own policies suited to their own needs.
I think that's a really good point to interject, because over here the big money fund has just been deployed to the mainnet.
Perfect.
And I think if it's okay with you, can we plug that into the screen and watch you complete the next steps?
Yeah.
So would you mind coming over here? So this fund has now been deployed to the mainnet. And what we're going to watch now is the risk management policies being added. And I'm just going to talk you through the suite of risk management policies that we have on the mainnet already.
I can try, but I don't know your keyboard. I don't think that we can zoom on the...
It's actually, I am zoomed in, but when you put the HDMI in, unfortunately it shrinks it.
Try to do something.
Sorry, yeah. But I'll try to be as clear as possible with the explanations.
Oh, I think that now...
Oh yeah, yeah.
Okay. Is that fine? Okay.
Is that better? Okay.
Right.
So right here you can see there are 6 different policies that we have available as of today.
Policies like...
So basically, the first one is a price tolerance. And basically, this is a percentage which you can define, which stops the manager being able to trade plus or minus X% away from the best bid or best offer to the disadvantage of the client or the investor. So this basically is put in place to stop a malicious fund manager trying to drain the funds by trading with himself or herself on a DEX or whatever, and giving opportunity for that to be spotted before it's too late. So the idea is to have a reasonably tight price tolerance there. The next one is the maximum number of positions. So basically that defines how many positions the manager can take at any one time. And generally speaking, investors like to see focus, or when the asset universe becomes too big, it's quite hard to do too much due diligence on every single token. And some investors like to see focus. So that's the purpose behind the maximum number of positions. The max concentration is basically there to define the maximum position size as a percentage of assets under management. So you can make the fund as concentrated or not concentrated as you like. It really depends on the fund management strategy, but it gives investors the ability to choose and opt into a strategy that they approve upfront. And then we have a user whitelist and a user blacklist. And basically, a user whitelist is basically the whitelisting of investors. So basically, you can have your fund open to anyone and make it available to anyone to invest, or you can predefine certain Ethereum addresses which are allowed to invest in your fund. And this, of course, enables, if you wanted to do a KYC AML on those addresses or whatever, then you can control who's investing in your fund. So the toolkit is all there. You're also able to do an asset whitelist and blacklist, and basically that's predefining which assets are allowed to be tradable in the fund and which ones are certainly not. And you get that a lot with ESG or socially responsible funds, where you're not allowed to invest in, unethical investments or socially irresponsible investments, and that would be the purpose of having an upfront blacklist. So we're watching these rule sets get created now. So we're on maximum number of positions. You don't have to, you can use as many or as little of these rule sets as you want. You can also choose not to have any rule sets, and that's also fine. But the goal is really to replicate those 100-page plus legal documents that stipulate clearly in real life, in traditional asset management, what a fund manager can and can't do. Because, with all the sort of Madoffs of the world, there is an increasing demand for this kind of transparency. So how are we doing?
Can I go in?
Yeah, I can go.
Yeah, go ahead. Yeah.
Do I have to do one by one, or can I just set all of them and then?
You can do one by one. You don't have to do all of them. It's only the ones you feel you want to do.
So,
Perfect. So you've put a maximum number of positions, 10, and he's now deploying this rule set onto his on-chain fund, the big money fund, in case you missed that. Yeah. And while this transaction gets completed on stage, as soon as that gets completed, actually, I think you just want to do that. As soon as your policies get registered and you see your fund created, you can go back and have a seat again, and we'll thank you.
Thank you.
We may need you again a bit later, but...
Okay. Sorry. Okay, I hope we didn't lose you. I know that there is a lot of movement and changing computers. So we're back in the presentation now while they're deploying their risk management profile. So what you just saw, this risk management profile and all of those rules that you can choose, are the rules that we built during the V1 of the protocol. One second. Small thing, just to make sure we're on the same page. So those rules are the rules that we deployed with the V1 version of the protocol. But as I was saying, anyone can build their own rules. It's very, very simple. Using that, we believe that Mellon can be used to interact with other DeFi protocols in a more responsible and sensible way. Therefore, reducing the overall risk. So hopefully, Mellon can help make DeFi a safer place. Okay, so now what you've seen is you've heard about what Mellon is, you've seen how we create a fund, you've heard about the risk management and how we can select rules that will be enforced for the lifetime of the fund. And now we thought that it would be a good time to give you a little bit of context on the Mellon ecosystem. So Melon Port, which is the company that you might have heard about before, was the company that built the V1 of the protocol and released it in February 2019. So this company had a 2 years lifetime and a very precise mandate of just developing and releasing the V1 of the protocol. After that, Melon Port has been liquidated in March 2019, and the governance of Mellon has been handed over to a decentralized governance system, which is the Melon Council. So the Melon Council is a user-centric and skill-based body. It is a DAO that runs on the Aragon OS framework, and it has 3 main responsibilities. The first one is maintenance and further development of the protocol, so making upgrades to Mellon. The second one is adjusting network parameters, such as the Mellon gas price. And the third one is allocating the financial resources of the network. So the Mellon token has some inflation built in, and the Mellon Council can vote on whether or not they would like to fund teams who want to build on Mellon. So anyone who wants to build on Mellon can apply for a Mellon funding to the Mellon Council, and the Mellon Council votes on-chain whether or not to accept it. So that's what they do. And as far as how is it composed, the Mellon Council is composed of 2 subgroups. The first one is what we call the Mellon Technical Council. So this is a group of technical experts that have expertise either on the Mellon protocol itself or on other related DeFi protocols. And they are really responsible for looking after the technical part of Mellon and making sure that it stays a secure and a secure protocol, and it keeps its integrity over time. The second group is what we call the Mellon exposed businesses, and they are the representatives of the users. So in our governance system, we really wanted to make sure that the users of the network were represented because they were the most fragile player in the space, in this ecosystem at least. So what we've done is that the users of the Mellon network are able to elect their delegates to sit on the Mellon Council together with the technical council and to take part into the decisions relative to the protocol. So this is the current composition of the Mellon Council. So it's formed with 8 individuals or entities. So as you can see, we have a quite diverse set of ecosystem players in the Ethereum space. We have someone representing Finex, we have 2 security auditors, we have 1 fund manager, we have 1 market maker, we have a researcher at DevHub and the Ethereum Foundation, and we have someone from Parity. And the last one is the former Melon Port team. So our team also has 1 seat on that council. So we had 1 vote out of the 8 votes on the council. So what's important here to say, and I think it's a good audience to say that too, is that anyone can apply to join the council. If you have a relevant expertise with regards to Mellon or to DeFi or to finance or to asset management, you are eligible to join the Mellon Technical Council. So you can apply and the council will vote. Or if you are a user of Mellon, you can also be elected by the other users to join this council. So we're very keen to welcome new people. We've had a few applications in the past few weeks, so this should be expanded and maybe if the council accepts over the next month or so. So now that I've told you about how the governance of Mellon works, you must be wondering, now that Melon Port does not exist, who actually works on Mellon on an everyday basis? So as I've mentioned, there is a funding system that enables teams to apply for funding. And the first team that has done this back in April this year is the Ash team. So that team is the first team that made a Melon funding proposal to the Melon Council, which was accepted back in April or March. And so what they're doing is quite cool. They're building on top of Mellon. They're building a mobile app for kind of like a fund management and investing on Ethereum and Mellon. It's kind of like a gamification of asset management. So they're currently in development. They just completed the phase 1 of their development, and they actually launched their beta testing version this week with close to 1,000 users signed up. So if you're interested, we invite you to also try their stuff. So that's the first team working on Mellon. And now we're going to tell you about the second team working on Mellon, and I'll let Mona do that.
Okay, so with that, we have an announcement to make today. So the former Melon Port team are unveiling avant-garde finance today for avant-gardist finance asset managers. And our stated vision is to create better everyday experiences for aspiring asset managers and investors in their asset management products by leveraging Mellon and other decentralized finance technologies. So avant-garde finance is composed of some of the key members of some of the former Melon Port team. It's important to say that we are still in stealth mode, but today we're here to tell you one part of what we're doing. As of this morning, As of this morning, we have submitted the second ever proposal to the Melon Council, which proposes to take on the lead developer role of the Melon protocol and ecosystem for the next 3 years. We're not going to go into all of the details today, but it's available online and will be shared on social media after this talk. But basically, the goal is to take Mellon to the next level by making sure that in the next 2 to 3 years, we're integrated across the board with every single other DeFi protocol out there. The goal is to increase the risk management, usability, and availability, and basically to very much improve the user experience. And user experience can be everything from working on regulatory solutions to better UX to just better documentation. But you'll be hopefully seeing the fruits of our labor regularly and soon if the Melon Council approves this proposal. And we look forward to sharing that with you guys after this session. But we're going to keep this session more focused on the future of DeFi with Mellon. And we encourage you to go and read more about the proposal and follow us on social media with Avant-Garde Finance to learn more about the proposal we've made.
Okay, I was about to continue with that slide, but I just got a very interesting news that we're going to verify right now. So I've heard that our investor over here just invested 50 Ether in each of the funds that were just created. So we can go and check, actually 49 Ether. So these are the 2 funds that were just created by our amazing avant-gardist volunteers. So we can go into, we'll go into one of those funds to inspect. So the Big Money Fund, we can now see its fact sheet and the different, the different rules that were set up. So here we have one rule, etc. You've seen this with Mona earlier today, but what's important to see is that now we have an NAV of 49 Ether, which were just invested. So it's the same for the other funds, and basically you are now the owner of a fund, and you have an investor that has invested 49 Ether, so we hope that you manage that because he will be watching. And he's also told me that he will keep those Ether invested as long as he sees that those funds stay active. So you have the keys to...
Do I know anything about the investor?
Sorry?
No.
So that's cool. Thank you, Zara, for this. And we'll go back to the presentation.
Melon token, the utility token for, how do you monetize?
So the question is, how do you monetize the protocol, or what's the purpose of the Melon token?
Yeah.
So the Melon token is used as asset management gas on the network. So it's charged on 3 functions: setup fund, when you claim any kind of rewards for fees, and when someone invests in a fund. Importantly, it's not traded. It's not charged on transactions, and it's not charged on redeem, because people should be able to redeem freely at any time. And basically, it's a buy and burn model. So basically, the usage of the network is directly proportional to the purchasing power of the token.
Cool. We're going to do a smoke Q&A after, so maybe if you want more details, we can answer more questions on that. But we're actually getting to the end of the presentation, and after learning more about what Mellon is and setting up funds with our volunteers here, and seeing the unique characteristic of Mellon, we just wanted to kind of like finish on a nice note. So obviously Mellon is, the main use case is deploying on-chain investment vehicles or funds. But the thing is, we're evolving in a space that has a lot of things happening quite fast. So yes, you can deploy vanilla funds on Mellon, but you can also do a bunch of really cool things. And because there is a virtual hackathon that is happening over the next 7 weeks, we thought that we would give a few ideas that we've had or heard that we thought were cool. So the first idea is that Mellon is actually an excellent tool to manage the treasury of DAOs. So as you know, DAOs have assets that exist on-chain, and sometimes, very often, very large amounts of assets, of capital that really shouldn't be sitting there doing nothing. So Mellon can be used to manage those assets, preserve the wealth, and grow the capital of DAOs in general. And I think DAOs, I mean, it's a hot topic right now, and hopefully we'll see some interesting integration over the next few months. Another idea is for the people who are into trend trading strategies. It's very easy to plug any trading strategy that you have that is coded into an algorithm, to plug that in with a Mellon fund. And you know, from very basic things such as moving average crossovers or RSI, all of that is, you can just code it in JavaScript with our JavaScript library, or directly plug into the smart contracts, plug it in, and let your fund be. So that's very possible. We don't think it's the most exciting use case, but it's definitely possible. Another ideas are staking funds. So there are more and more staking assets. And one cool use case is to use Mellon to pool assets that are stakeable. And to have the manager operate as a validator on different protocols. So that's something that I don't see happening like tomorrow, immediately, in the near future, but in a couple of months that should become a thing. And also, with everything that we have in DeFi, those staked assets may be tokenized and used as collateral in other lending protocols. I've heard some people are interested to do that. I don't think this is a good idea, so we don't recommend doing that. This is rehypothecation, and probably what got us into the 2008 crisis, but it's possible to do it. Another cool use case or integration, you could have what we call a DeFi keeper fund. So all of the lending protocols, they have this concept of liquidation. When a loan becomes under-collateralized, you have those functions that people can call to liquidate those positions. So in the case of Maker, you could have a bot that watches all of the Maker CDPs, and as soon as you see a CDP that becomes under-collateralized, you can just have your Mellon fund liquidate it and buy the collateral at a discount, all in the same transaction. So that could be a profitable strategy and also a useful one for the space in general. Another idea that we've heard about a couple of days ago is integration with Meta Money Market, which is a protocol that optimizes the allocation between different yielding protocols. So you could have a fund, very low risk, that just makes an optimal allocation between the different lending protocols and rebalances when deemed sensible. So Jacob from Meta Money Market was presenting or is presenting tomorrow. So it's definitely an interesting project that I will personally keep an eye on. Another thing, a little bit more ethically questionable, you could have a fund that takes short positions on protocols whose security is questionable or that have a high technical security risk. So you could take short positions using prediction markets or other derivatives market that we have, derivatives protocols that we have. And this fund could also be using the Nexus Mutual Protocol, which is an insurance protocol. And it could be staking NXM tokens on the protocols that they're quite confident on the security. So that could be an interesting one. If there are security experts, good strategy. And another one, which is also, we hope to see soon, is using Melon Fund for market makers on decentralized exchanges. So you could be providing liquidity to different protocols. We have 2 examples here. You could become a reserve manager on Kyber within a Melon Fund, and you could also provide liquidity on Uniswap. So this would basically be pooling capital to provide liquidity to some of the decentralized exchanges in the space. And you could also have socially responsible funds, investing only in ESG compliant assets using the risk management. And someone is working on a Givethe module, which plugs in Melon funds with Givethe, and you can decide to distribute a portion of your fee to a chosen charity. Just an idea. I mean, there are obviously many other ideas. We're very keen to hear yours. And if you're interested into building any of those, please get in touch with us because we're very happy to support any initiative.
Yeah, and maybe just to conclude before we take questions, I have one. Okay. Just to conclude before we take questions and to recap, I think if you take one thing away about avant-garde finance today, it is that we want to use this proposal to help us in our mission to make Mellon the standard for asset management 3.0. And in order to do that, we need you guys, we need collaboration, we need participation in the hackathon, which has just launched, and we're very much involved there with a bunch of other DeFi projects. But please, come along and share your ideas, speak to us on social media. We're hosting some drinks after this conference at 6 o'clock next door at Bar 119. We'd love to hear from you with your ideas. And before we go to questions, I would just really like to give a big round of applause to our 2 volunteers because they did a great job, and we managed to succeed to deploy 2 avant-gardist funds to the mainnet in less than 20 minutes.
Yeah, thanks to the investor.
And before you both leave, we're actually going to give you the mnemonics. Oh, you already have the mnemonics for the fund, so you can go ahead and manage, and we'll be keeping an eye on you. So does anyone have any questions? Oh, great. Go ahead.
How does the redemption of the fund work, actually? So he's contributed 49 Ether and gets 49 tokens in return. If he wants to redeem, what does he do? Send the tokens back to the contract, and what happens then? So
I'm just going to repeat the question on the mic. How does the redemption work? What's your name, sorry? Gustav, very well observed that 49 ETH were invested in the fund during that demo and 49 shares were created. Now he's asking, how does the redemption work? That's a very good question. Basically, the redemption is basically a redemption in kind. So it's a redemption as a slice of the portfolio. So if you own X% of the portfolio, you receive X% of the assets back in your wallet. You have full custody at all times of your assets, and you can redeem at any time with no fee other than the Ethereum gas. There's no fee to the Mellon network.
Okay, so the assets are being returned. It's not being liquidated.
No. It's always the assets being returned. So if for some reason you have some reason not to trust the manager, or you think that for some reason you invested in a fund that had no risk management policies, you can redeem immediately.
Okay, thanks.
I wanted to ask if you mid or long term also plan to integrate tokenized traditional assets, or on the one hand to address the topic of banking the unbanked, so people who don't have access to, for example, US dollar, want to have an exposure to S&P 500, or people who want just to stay in crypto without changing back to fiat and have their portfolio also, you know, don't want to have 100% exposure to crypto, but maybe also still a bit to the traditional world?
So the question is if we have plans ever to integrate tokenized real-world assets and maybe some kind of fiat to crypto on-ramp, off-ramp. That's correct? Jen, I'll let you answer.
Not necessarily, but like tokenized real estate.
Or tokenized real estate, yeah.
Yeah. Actually, one of the very first assumption on which Mellon has been built is that all assets will be tokenized eventually, and we want Mellon to be the tool of choice to manage any asset in the future. So yes, as soon as there are those assets on-chain with a reliable price feed, they can be added into Mellon. And we don't really care if it's gold or uranium or real estate. Yes.
What is the fee or the cost to the fund manager? I mean, I pay $220, I receive $220, but to, I don't know, the platform, what am I paying?
That's a great question. That whole setup, sorry, repeating the question for the camera. What is the overall cost incurred by the Mellon manager for deploying the fund and presumably operating the fund, right? We can open up the monitoring tool to see that. And it was, it updates daily, but it's 0.1815, so it's under $60 or $50 actually to set up a fund. The operational side of things, so the setup is the most expensive part because there's no fees on trading. After that, it will just be every time you redeem your fees, there's a small transaction fee. The investors pay every time they invest, asset management gas. But once you've set up your fund, there's nothing else to pay except for when you redeem your fees.
Maybe just an addition is that the manager incurs the gas cost on Ethereum. So that depends on how much, what gas price you set, but you can factor that in your management fee. Right now, it has to be the manager paying those. Yeah.
Yeah.
I just had a question about regulation. I mean, how to work from a fund manager perspective. Obviously, being an asset manager, you have to be regulated.
Yeah.
How does one approach it when it's decentralized?
Yeah, so the question is about regulation and how does that, what does a fund manager have to think about in that respect? And that's actually where things get a little bit complicated for fund management because the regulations are quite tricky and they're designed for an off-chain market. So it's not ideal. But that's why one of the big focuses we have going forward is also finding regulatory compliant ways of setting up on-chain funds, experimenting in different jurisdictions. And you may remember, some of you, in 2017, we were very forward-thinking in realizing that this was going to be an issue. So we co-founded MAMA, which is the Multi-Chain Asset Managers Association, which we have the executive director, Hans-Jörg Hettisch, sitting here in the audience, if any of you want to talk to him about that. But this is really the hub where we share information and experiment in different jurisdictions, and we're making really good progress in terms of figuring out compliant ways of using Mellon. I'm not going to go into the details of that here, but if you want to learn more, come and speak to us after the presentation or to Hans-Jörg and get involved, because the more, a large part of MAMA is operated based on volunteers who are passionate about making this a reality. So we could always do with more hands helping.
And we'll have a panel tomorrow at, I think, 4 p.m. Here at the main stage, actually, about regulation on blockchain asset management.
So just to repeat what Hans-Jörg said for the camera again, there will be a panel hosted by MAMA tomorrow on on-chain asset management regulation. I would say that MAMA is the only association globally focused on this niche, basically making on-chain asset management a reality. It's a really important niche. There's a lot of tricky aspects to how to bring on-chain finance and especially asset management a reality in a kind of regulated, regulatory acceptable way. But we're now more and more, the association is being approached by larger associations to tap into their expertise on that subject. So it's really starting to take off in a really nice way, and we're really starting to get good traction. I think just this year there were meetings in WEF Davos hosted by Angela Merkel roundtables. There was meetings with ESMA. There was meetings with calls with the FCA. There's been calls with a lot of different regulators over the globe, and we're really trying to raise the bar and basically write the narrative of on-chain asset management rather than have someone like JP Morgan write the narrative of on-chain asset management. So great. So if there are no more questions, we're here for a little bit, and then we're all wandering down to bar 190. So if anyone wants to come and have a word, we'll be here. Otherwise, hope to see you all soon.